Hello, everyone. I hope that you had a wonderful weekend and hope that you rested today, as today is a bank holiday, right? So there isn't much, to do. Well, there isn't anything at all to do, but technically you could find something to do, but it would be low probability, right? So today we'll be going some sequences, you know, whereas you have where you will see where we have precision swing points formed, after which you will have a lower time frame fair value gap forming within that precision swing point. Whenever that happens, and you'll just see. I don't want to just talk without showing you guys. Anyways, so as you guys can see, today is a US bank holiday, right? So currently the S&P 500 and NASDAQ, right? There is no trading going on right now, right? So the markets are actually closed, right? Tomorrow and Tuesday, right? We can see some volatility at 10 a.m., right? So Tuesday is tradable tomorrow. Wednesday will be tradable as well. And Thursday we will have, a lot of high impact news events during the New York session. And the same for Friday, right? And Friday we have NFP, right? Non-farm payroll. So this week already looks, a bit exciting, right? So if you guys can recall, right, at the formation of this precision swing point, well, when this occurred, right, and then after this one happened right here, right, we were, on the bias of expecting price to continue higher, right? So here we had a precision swing point. This is the 4-hour time frame, and of course, wherever you see me have these, eyes, placed. That's the drawn liquidity. So here for the S&P 500, and here for the Dow, right? You can see that there's no eyes right here, right? Which means that we could expect some, a cracking correlation due to the fact that, this high, is all the way here, right? Whereas we have, price literally, right, just a few points below this high for the S&P 500. But for the NASDAQ, this high, this one is, very far away. So here, right, you can see that we have this fair value gap right here, right, which occurred after we had this position swing point, which occurred after we had sequential SMT, right? So we had sequential SMT, then this precision swing point, then we dropped lower, right? And the reason why we dropped lower, right, was due to the fact that we had a lower time frame, SMT right here, and a precision swing point as well. So the fact that this SMT was of a, lower cycle than this one right here, the only thing that this would do was just cause a retracement, while we will still see the higher time frame sequential SMT continue to push price higher, right? So here we had price trade within this fair value gap. We had SMT here as well, and a lower time frame precision swing point here, which we will look at, next. Here as well, you can see for the NASDAQ, this is a precision swing point which occurred when? After we had a sequential SMT, in regards to the monthly cycle, right? And keep in mind that this is the first week of the month. So again, here you can see that we had a lower high, well, this is a lower high, and then a failure swing, price failed to take this low out. And here as well, here you can see that we had price just pushing higher and higher, right, due to the fact that this was sequential SMT, which is bullish. Now here we have the 1 hour time frame, and here things can get a bit tricky, but it's not at all, and you'll see that. So here, right, if you guys remember from the previous chart that we were looking at, which was just a higher time frame of these two right here, including the Dow, but now we're just focused on the S&P 500 and Nasdaq, right? Just for just to compare, right? Don't want to be having too much charts on the screen and lines and such. So this candle right here, right, you can see that this is the 1 hour time frame. Here we had a 4-hour precision swing point, right? Whenever you have a down candle like this, which occurred after sequential SMT, right, and after a higher time frame precision swing point formation, this candle immediately becomes a order block. This is a real order block, right? This is what it is, and it has everything to do with time, right? It's not going to trade it into a higher time frame for your value gap, even though of course you can use that as well, right? But you can use time and trade, or you can use price and trade, or you can mix them, right? It just depends on you. So here we have this right here, right? If you look over here, you can see that we have a inverse fair value gap right here. This is a high probability inverse fair value gap. And why is that? That's due to the fact that it was formed, right, within this 4-hour wick right here, right? So anyways, even if you don't want to use that frame of thought, or what I just said to you, you can just you look at it as a regular inverse fair value gap. So here we had price drop, rejected, then it dropped again. Now why right here, and we did expect price to go higher. Why did we expect price to go higher? Or why did price go higher? Here we have what? That's a precision swing point, right? So it doesn't matter, right, how small of a difference it is, right? As long as this candle is up closed and this candle is down closed, and they occurred at the same time, right, and they are different, it's a precision swing point, right? And to be honest, whenever it wicks like this, and leaves this tiny amount of movement that is visible, that shows that this buying was taking place here and selling was taking place here, this actually makes it more probable. Why? Because remember that wicks are gaps, so price is going to find a gap that should be here on the lower time frame, right? Here you can see that this is the 50-minute time frame. This was the 1 hour time frame. So we're looking right here where we have this precision swing point, which is right here, right? So this candle right here, the precision swing point was from this candle to this candle, which left what? A gap, a fair value gap. So once we have price drop down in this fair value gap, and then even then you can see that we still had a cracking correlation right here between these wicks, right? So whenever you're this low, right, whenever you have, for example, the higher time frame agreeing with everything. So for example, this is taking place within a precision swing point, of a higher time frame. So we're under 15 time frame. This is taking place within a 1 hour precision swing point. What do you look for? The gap. So price drops in the gap on whenever we're on the 50-minute time frame. And you're keeping in mind that there's a 1 hour precision swing point, and there was a higher time frame sequence SMT, then you can expect this type of price action. Okay. Does this always happen? No. But is it better than everything else that's out there? Yes. Will you win every single trade? No. And that's why you need to practice risk management. Even if you're 90% accurate, even if you're 80% accurate, it doesn't matter, because you have to lose, right? Whether it's due to the fact that you're having, a problem with your spouse, your cat just jumps, on your back while you're trading, your baby starts crying, startles you. something could happen. Something could just fall off, your table, break on the floor, light, the power could go out, things just happen, right? And you just need to be practicing risk management because you have this wonderful, way to read price action. To most of you guys, that have been here for a while, it seems simple to you, but if you go out right now and try to explain it to someone else, it won't be, right? And here you can see on the screen, right? We have, the criteria, for what I expect all of you to try to, find on a weekly basis as of now. So just for this entire month, right? You need to be trying to find this exact pattern. These is not even a pattern. You need because you have to fit the pattern, within these specific parameters of time. Right? So here you can see that we have a high impact news event, that must be taking place right here, right? Price must, of course, be above a true open, right? So if price is not above a true open, then you don't want to pay attention to it. If you're, looking for SMT. So even if you have SMT or sequential SMT, but it's not above true open, then, it's not valid. Everything must go together. Would that work some of the times? Yes. But you want something that always repeats. You want something that, you can fit on the back of a card. You can fit it on a calling card. You can, you can just write it down and put it on the wall beside you so you know what to look for all the time. It fails, that's okay. You go again. You win, okay. You stop trading now. So here we have sequential SMT, occurring above the true open, right? Then we have a precision swing point that must form and be above, well, it must be above the true open, of course. And here, you must have all of this occur where you have the SMT, the precision swing point, price above the true open. Everything must take place within this specific time where you have the high impact news event. Could the SMT be intermarket sequential SMT? Yes, it could be. It could be that as well. As long as you have sequential SMT, right? Not just regular SMT. It must be sequential, right? And over here, right, we have the sequence in which we look for gaps, right? So if you're using the monthly cycle, which if you're using the monthly cycle, that means that you are trying to swing trade, right? Swing trades are found using the monthly cycle, right? This is as simple as we can make it. Swing trades are used, well, swing trades are found on the monthly cycle, right? What do you use? You obviously you're going to have your entry form within a 4-hour precision swing point, right? And within that entry, what will you be looking for? Either a order block, right? Obviously up close candle if you're bearish, or just a fair value gap, or a down close candle if you're bullish, or a fair value gap. If you're using the weekly cycle trade, that means that you're just an intra-week trader, right? So you will be using the 1-hour precision swing point, which occurs after all of this has taken place within the specific area of time, whichever day it may be, right? Your entry will be on the 15-minute time frame, right? And it should be, of course, either a fair value gap or an order block, right? If same thing for if you're trading the daily cycle, which most of you guys will do, right? If you have sequential SMT, or, well, if you have SMT between, for example, the London session and the New York session, that will be sequential SMT, right? Then you have a 50-minute precision swing point, right as, that candle closes, that 15-minute candle closes. You go on the 5-minute time frame, and you just, well, you don't even need to wait for a gap. You could even trade before price falls within the gap, or trades up into the gap, as long as, you enter within the precision swing point, right? Of course, price should be in, premium if you're bearish, and discount if you're bullish, right? Those things are, elementary. We don't need to mention things like that, right? And for the lower time frame cycles, right, if you wish, to go that low, to go that deep, you can, right? So this is something that I need you guys to practice, right? If you get it wrong, tomorrow, for example, you get it wrong tomorrow, it's okay, right? Just try to get it right the next day, right? If, you want, you can try to go back test, try to prove, this thing wrong. Every move that happens, it happens, because of this, whenever we have explosive moves, right? There are more models, but this one, you have so much things that must come together that it's, if you follow this, it will be difficult, for you to be wrong. Do you understand? When it comes to aiming for, for your, take profit, what do you do? For the precision swing point, right? You want to get at least, 2 of, the size of the precision swing point. So for example, first TP would be here, and your second TP would be here. Keep in mind that the precision swing point is off a higher time frame, right? The precision swing point is of a higher time frame. So if you're entering in a lower time frame within the precision swing point, by default, your stop, you will have a, tight stop loss in comparison to your TP. So I hope that you found this useful, right? And I expect you guys to, take note of all of this, go into your charts, try to dig deep, just try to follow it, manage your risk, right? It's impossible for you to fail if you manage your risk. I've never heard of someone blowing their account by managing their risk. You can't blow your account if you manage your risk. I'm not saying that a lot of you are blowing your accounts. I'm just saying that, you don't want to just be, on a winning streak and just, risking more and more as you go, right? Keep it simple and follow the rules. And with that being said, good luck and good trading. We'll talk Wednesday at 6 p.m. Eastern Standard Time, or maybe an hour before, because you guys know me. Sometimes I get too excited and I just want to talk now. So yeah, talk to you guys soon.